Here is something that have increased my win to reward ratio, and I use this almost every day to take my trade. Now I call this the high probability trade setup. But before I dive into this, let me show you the trade I took using this particular trade setup. Here is my Telegram channel, and if you're new here, you can join the Telegram. I post trade before I take, and you can also learn a lot and also follow what I do on my YouTube channel. Now here we have the trade I took. This was the setup before it happens. I posted it, and also this was the outcome of the trade using the method or the setup I'm about to show you. So this is also the entry I took, and I have another setup here. So here is another setup I took, and here is another one. So I use this almost every day. So if you want to be part of what we do, you can find the link to the Telegram group in the description of this video. So let us deep dive into this high probability trade setup. Now, I want to establish this before I continue so that this thing will be clear. Now, anything I said here is actually applicable in all the time frame because price is fractal. And for the purpose of this video, I'll be looking at 15 minutes time frame and 3 minutes time frame for entry, which means I'm looking at the internal structure and also the entry time frame, which is 15 minutes and 3 minutes time frame. But you can apply this on the time frame using time frame alignment. Here we have this big diagram and it looks confusing, but to others this is not confusing. But before we look at this big diagram, let's look at this basic information. We have point of interest, which is the POI. And for me, using this high probability trade setup, I use the breaker block and also the order block. And I applied liquidity as a concept to, to filter which type of order block and also breaker block should be used. Here, I want you to focus on this big diagram, and we have the 15 minutes time frame. So this bold diagram here is the 15 minutes time frame, and this diagram that is not bold is the 3 minutes time frame. So based on this diagram, we can see the price is bearish because we have this break of structure. So we have this high here, which is a strong high, and we have a break of structure at this level. So whenever we have this kind of scenario, we know that price is bearish. And also when this happens, it leaves us with two important level or point of interest. That is the order block, which is the origin that created this break of structure, or the highest high that created this break of structure. And also after the break of structure, we have another block here that was violated, which gives us the breaker block. So after price break structure, you don't just engage into selling the market or buying. And in this case, we have price being bearish. So price break structure at this level, you don't just start selling. And you don't know how far this sell will continue before price will reprice or price will create a pullback. Now, this is where you have to consider the 3 minutes time frame or the lower time frame below the time frame you're looking at. Now, in this case, we have 15 minutes time frame and we're looking at 3 minutes time frame. And how do we know that price is going to pull back? First is to see a change of character on the lower time frame, which is 3 minutes in this case. And also, when you have the change of character, it's just a first indication that price is willing to pull back. And price may decide to do something like this, change of character, and then you see a change of character, then price will go down again. But to confirm the pullback, you have to see what we call the break of structure. You have to see price creating break of structure and price is moving to the point of interest. And like I've said, the point of interest is this breaker block or this order block. So the 3 minutes, which is using the time frame alignment, is very, very important to determine pullback, because you don't just determine pullback without market giving you an indication that price is going to start pulling back. So here you have to see price creating this pullback. Let me introduce the concept of liquidity. Now, consider this diagram here, this small diagram, as this diagram on the right, this big diagram. So we have a break of structure we also have a break of structure. As soon as you have a break of structure, you have to consider the price leg on the left. And in this case, this is the price leg on the left. And this is also the price leg on the left. So you have to look at the price leg on the left and identify areas of liquidity. So in this case, we can see that we have this pullback before the break of structure, and this pullback serves as the liquidity because the liquidity here is protecting this origin, which is the order block. At the same time, this order block is high probability because it resulted to the break of structure. Now, the second thing is we have breaker block, and I have put this mark here. If this breaker block is going to hold price, you should be able to see liquidity in form of fair value gap that is confluencing the breaker block, and also you should be able to see price created liquidity. So if you're going to consider the breaker block, you want to see a fair value gap and also price return into the breaker block and then create liquidity. That is engineer liquidity by creating consolidation, and then you see a sharp manipulation before taking the price bearish. But for me, I don't usually consider breaker block without price creating such a manipulation on the right of the chart. And in this case, the right side of the chart is this particular leg here. So this particular leg is the right side of the chart. We want to see price creating, engineering liquidity before they sell at the breaker block. But if the breaker block couldn't hold price and price take out this swing high, then this will be a high probability. And the second aspect is this, which is we see that we have a break of structure. Like I've said, this is the left side and it's the same thing as this. And also this is the right side and it's the same thing as this. Now we see a break of structure and we have our order block and breaker block. But here we don't have liquidity. There is no engineer liquidity. There is no swing high. So when price reaches our breaker block, we want to see, price engineering liquidity by creating consolidation. And then we see a manipulation. Then we see a sell. That means the breaker block will be high probability because we've seen an engineered liquidity, a simple manipulation into the breaker block, and then price starts selling. Now, if this did not happen, we should be able to see price coming into this, reference point, and then it will violate it because there is no engineered liquidity. Price can decide to come to this order block and then sweep liquidity below the order block because price did not engineer liquidity. Price will sweep liquidity. But in the case that on the right side of the chart, price came close to the order block and then engineered liquidity, you will see a form of fake breakout, like a change of character, and then people will be expecting to sell. Then price will take out the high and sell. So this is what will happen in this scenario. So this is how I look at liquidity entirely in trading. So let me go to the chart and demonstrate this for you to understand it clearly. So here is the chart and I'm going to demonstrate what I have explained earlier. So here, let's start with the breaker block here. Now we have this. This is a break of structure and we've seen that price has, closed below it. So we have this high at this level, which is our strong high. Then we don't want to see price violating this high. So we can put a line here as our strong high, and we don't want to see price violating. Now, as soon as we see this break of structure, we see a very strong break of structure. The question is, how do we know that price is going to retrace into our breaker block? Because this is the breaker block here. And if we are to mark it, we can mark the entire candle. That means the entire candle here becomes the breaker block. So you see, it has really engulfed a lot of things, including this last candle that created this sharp move. So we have this breaker block. And also, like I've said, we have to see a fair value gap, and we have one. This is a fair value gap at this level. Here, we have one fair value gap. So what do we need to see? We have seen this breaker block and we see a fair value gap. Now, how do we know that price is going to start retracing? Remember, like I've said, we need to go to the 3 minutes time frame and see whether we have a change of character and also break of structure to see if price is going to pull back. So next thing we're going to do is to go to the 3 minutes time frame. So here is the 3 minutes time frame. And what do we have here? We have seen that price has created this market structure shift here. And we had a break of structure because here on the 1 minute, you will see a market structure shift. That is a change of character. And we see break of structure here. That's to tell you that price is going to go, the pullback is confirmed. But here, how do we enter? Like I've said, because we have this breaker block here, which is on the 15 minutes time frame, and this is a 3 minutes time frame. We've seen this breaker block. Now we have this pullback. How do we know that this breaker block is going to hold price? Is for us to be able to see price generating liquidity here. Because what do we have here? We see that price came here, and then we see price creating this high, and price close inside the range. Then we have seen also that price has created this low, which is the shift of structure here. We've seen that price has created this shift of structure at this level because this is an entry time frame. And then we see price sold from that level. And what happened is because inside this breaker block, we had our fair value gap, and also we've seen that price has really generated the liquidity. How is it the price has generated liquidity here? Because we've seen that before this break of structure here on this 3 minutes, it happens here. You see, price created this break of structure, but it was the first false break of structure. If you go to 1 minute, you will see it, and then price induced a lot of traders into, because this false break of structure induced traders. If you go to the 1 minute, you will see it, and then they thought price is going to continue bearish. Meanwhile, it took out their stop loss. So there was an engineered liquidity, and then the real change of character happens here. Then we see price entered into the order block here, or we can call it the zone, and then sold off from that place. So if you miss the entry here, you have another entry at this level here, because we've seen price has created this another break of structure, and then price retraces into it, and then right from there price sold. So here your trade will be at this level. You have your entry here, and your stop loss will be above this high, and then you will target this low. If you miss this, you can have another entry at this level. You're entering here, and then your stop loss will be above this high, and then you're taking your trade. Now you have 1:1 ratio, or let's say 1:1 ratio. And also here you have 5:1. Here you have 1:1 ratio. So almost 2 ratios of trade. So let's go back to our 15 minutes and look at the second possibility of trade. So here, what do we have? After taking this sales trade, we've seen that price created this break of structure again. And when price created break of structure, we have this high here, and then this low. And if you look at it, the break of structure is very, very long, very, very big. So we're expecting a pullback. And how do you know that price is going to pull back? Is to go to 3 minutes and identify change of character and also BOS to pull back into the levels. And which levels are we looking at? We are looking at what? We are looking at the breaker block and the order block. Here is the order block in this case. And we also have the breaker block, which is this large candle. Sometimes I, refine it into this wick. And also we have our fair value gap. So what we need to do is to go to the 3 minutes and expect price to come into the levels. And if you look at it on the left side, there is no liquidity that was created. There was no swing high to say that, okay, we're expecting price. There's no pullback to expect that this order block have liquidity. So we'll be expecting price to generate liquidity. But we have two important price level, which is the order block and the breaker block. So let's go to the 3 minutes time frame. So on the 3 minutes time frame, we have something, even though on the 15 minutes time frame, there is none. Here on the 3 minutes time frame, we have our liquidity. here resting above this high. You see that? This is our liquidity resting above this high. And this tells us that the breaker block is likely to hold price. Secondly, we've seen that on the 3 minutes, we see a market structure shift here at this level, inducing sellers. Here, price created this market structure shift that induced seller, and then price take out the high. So there was an engineered liquidity at this level. If you go to the 1 minute time frame, you will see it. And then price entered into the breaker block. Because of this liquidity, we have liquidity here, and also we have this engineered liquidity. How is it engineered liquidity? Price will create some form of market structure shift on either the same time frame or lower time frame, and then price will fail to continue bearish. Then price will take out this high, then go bearish. So we've seen an engineered liquidity at this level. So which makes this level, which is the breaker block, high probability. All you need to do is to place your trade and your entry here, and then your stop loss should be above this high. Then you will target what? This particular low of the market, and then you have 1:9 risk to reward ratio. Now the same thing again, we've seen that price created the break of structure. If you go to 15 minutes time frame, you will see that price has created a break of structure here. Let me remove this. Price created a break of structure at this level. And what are we expecting? We're expecting a pullback. So we're expecting a pullback. And how do we know that price is going to pull back? Price is going to pull back by creating market structure shift or change of character, and then break of structure on the lower time frame for the pullback. And in this case, we've seen that this happened on the same time frame. Yes, it happens on the same time frame because price can do otherwise. And then we have this, our zone here, and also we have our breaker block. But because we've seen price created a pullback here, we've seen the market structure shift here or change of character, and then right from there we see break of structure, and then price came into the point of interest. And if you're going to consider liquidity, we have liquidity on the left because we have this particular pullback, and we have liquidity resting here. At the same time, we've seen price creating an engineered liquidity here, creating this market structure shift, and then induce sellers into selling before the actual move happened. And I had this trade also, like I've showed on my Telegram group. So what I did was to enter the trade at this level, and my stop loss here, and what I did was to target this low, and price came and gave us our entry. Price gave us an entry, and we had this sell trade. So guys, this is how I take trades, and you can use this method to be profitable also. So see you in the next video.